Kababayan, ang pambansang awit ng Pilipinas.
So thank you so much. I'm really excited for this session, of course, and we have our first speaker to share with you, no, investments and stocks, and he is really going to rock this room. Okay, so let me give you his profile, and I cannot really wait to see him here. So for over 17 years, he has been educating hundreds of thousands of Filipinos to be financially smart and helping many Filipinos to have a prosperous life. He has been invited to speak in several programs of the government and private multinational corporations to discuss investments, financial literacy, and business strategy. In year 2020, the Ilustrado magazine has recognized as one of the most influential Filipinos in the globe and featured as an education advocate. So our speaker actually is also an international speaker for several international conferences and seminars in the US, UAE, Qatar, Bahrain, and Philippines on the topics related to business strategy, stock market, banking, risk management, internal controls, global leadership. He also authored a powerful investment book called PISO Master, and he continuously educating thousands of global Filipinos in terms of leadership, business, finance, investment, and financial literacy. He completed the Executive Leadership Program at Harvard Business Corporate Learning. He is also a recipient of the prestigious Global Professional Scholarship for the Global Executive Master of Business Administration at Holt International Business School, based in Cambridge, Massachusetts, USA, in his Executive MBA program. He received a recognition for academic achievement as one of the top notchers in the Global Executive MBA program. And take note, okay, this Executive MBA program, hindi po siya basta-basta. Okay? Colleague niya rin po ako sa school na to. Alumni din ako ng Holt International Business School. So I know how hard it is to pass. But being a top-notcher in the Global Executive MBA program is really, really going to blow your mind with what he's going to share. So, from his quote, I really love this quote, "You will never know your full power until you learn that unleashing it is the option. It is the only option you got." So please, let us all give a virtual welcome to our PISO Master, Mr. Lyndon Magsino.
What are we expecting in this session today? And I think we are also live in Facebook, so around the world, as per Jonathan. Anyway, thank you so much for having me here. And I know it is a very short session, only for 1 hour, but we will try to cover and maximize whatever we can cover and learn today. Let's maybe dive into the session. So just give me a sec if I can share my screen. Okay, everyone, welcome to the Smart Investing in the PISO Master Way. So I hope you have all your notes and your pens, and we will discuss everything about stock market and investment. So let's proceed. So what I'm prepared for the session today is something that I personally, this is my personal interest as well, and this is what I do for over 17 years. And bits and pieces of what we will discuss is also something that I have written in my book. It's called PISO Master. The whole concept of PISO Master is about, you know, people are always working for the money. And almost to the point of we are becoming the servant of the money. And I'm sure you can, a lot of you can relate to this. But the whole concept of PISO Master is about, we need to be the master of our money. We need to be the employer of our money, meaning we will deploy or utilize our money to create more money. So that's the whole concept of PISO Master. And that is only possible if you are investing your money into something that will give you or generate a return. So the whole concept of this is something that personally I would like to share with you, and a lot of successes and failures in my investment journey is something that I can perhaps share with you so that you can take some learnings and perhaps get some wisdom out of those experiences, and so that you can avoid those mistakes as well. So let's move on. So today we have this kind of very jam-packed agenda. We will talk about investing in a PISO Master Way. and then we will touch a little bit about the power of compounding, investing versus speculating. This is very important because a lot of Filipinos especially are thinking that they are investing, but in reality, they are just speculating. So, and my analogy in speculating is about, it is the same as blind investing. So if you are just speculating, you are not investing, you are just investing blindly. So we will discuss that. And then we will dive into the return on investment. I'm sure this terminology is very common to almost everyone, but do you really understand how to calculate return on investment? What is a good return on investment, and how you can balance the return on investment versus the risk? So we will discuss that. And then we will talk about investment due diligence. In this formula, it sounds so complicated, right? Due diligence is something that even investment bankers and traders are you know, it's very, very complicated formula, to be honest with you. But I have prepared a simplified formula so that you can use due diligence in your daily investing journey. And then we will touch the financial reporting, balance sheet, and income statement, because without understanding the financials, you cannot invest in a smart way. What I mean by that is finance and accounting are it is the language of business. So without understanding the terminology, the finance aspect, you cannot do due diligence, you cannot analyze the results and the performance of the company, and hence you will be like a Filipino guy in the middle of New Delhi, where everyone is talking in Hindi and you don't understand anything at all. So it is the same way in investing. If you don't understand the language of business and the language of investment, there's no way you can understand whether you are making money or not, or maybe you are losing, or maybe the company that you're investing is not performing very well. So it is very, very important. And depending on the time that we have, maybe we can look at the return on equity analysis. So these are the topics that I have prepared for all of you guys. So we have some more people joining us. Very nice. Okay, let's move on. So I have prepared here the Lyndon cash flow honeycomb. Okay, now maybe most of us here are working. We are all employed here. So your main source of income is coming from the salary, right? But for you to achieve financial freedom, you need to start generating income from multiple sources. Okay, and the reason for that is when you have multiple outflows, maybe tatawag yung nanay mo, sabihin sa'yo, anak, kailangan nating ipagawa yung bahay natin kasi bumagyo ng isang araw, lumipad yung bubong natin. Or anak, yung aso natin may lagnat, kailangan dalhin sa hospital urgent, right? So ang daming mga multiple outflows. But if you are highly dependent on one source of income, which is your salary, so second week or third week pa lang ng buwan, you are already experiencing the financial crisis, okay? Wala ka ng pera. Why? Oh, not because you have multiple outflows, not because you should ignore all your responsibilities back home, but because you have one source of income. And that one source of income, 100% it is not enough to cover and sustain all your multiple outflows. So I have prepared here deposit from your interest from your deposits. If you have borrowings or you lend money to someone else, you need to charge them an interest. So that's one way of earning money. Profit as well, capital gains, dividends, and rental income. So if you have all of these combination, plus you have your fixed income, then you can achieve financial freedom. Okay? Let's move on. Now, the whole concept of PISO Master is what I have explained earlier, but the passive income from stocks ownership is something that I have developed here, where you are actually combining your passive income and your active income. Okay? So what do I mean by that? If you are employed, you are actively working for the money, right? But the secret of a lot of wealthy people is their passive income is higher than the active income. So when we talk about passive income, these are the income that even though you are taking vacations somewhere, or enjoying life, or resting, or whatever you do, you are not actively working for the money, but money is flowing in continuously. That is your passive income. That can be coming from your dividends, from your rental yields, from investments, from capital gains, and so on and so forth. Now, I would like to discuss with you, how can you, how much money do you need to invest today so that you can live with your passive income? So ang tanong dito is, magkano ang kailangan mong i-invest ngayon para mabuhay ka doon sa income ng iyong passive, ng iyong mga investments? So the question is, how much money do you need to invest today to sustain your living expenses every month or every year? So this is what I would like to discuss with you. Now, okay, just give me a sec. I'm just checking the chat. Okay, that's fine. I cannot see the chats right now. Okay. So how much money do you need to prepare or to invest today? First thing is, you need to calculate all your living expenses monthly. And then whatever is the average expenses that you are incurring every month. So for example, in this case, I have assumed 2,000 monthly expenses. And then annualize that monthly expense, multiply it by 12. Then you will get 24,000. Okay. Now, once you get your annual expense, your living expenses, what you need to do is divide the return on investment that you're getting from your passive income. So once you get, let's say, for example, your passive income that you can generate from your investments can be, let's say, 8% or 10%. So let's say 8%. So your 24,000 annual expense, divide 8%, that will be equal to 300,000. So that 300,000 is the investment you need to do today for you to have 24,000 income from passive income every year. So that will be equivalent to your living expenses. So the good thing with this is, while you are living with your passive income, you are not even touching your salary, your active income, right? So that active income will go straight away to your investment or to your savings. Are we all clear here? Just give me a sec. I will just fix my screen, and maybe I will reshare again. I'll just stop sharing my screen and share it again. This concept of M-Vestor. So the whole concept of M-Vestor is, you are working as an employee in whatever company and whatever career you have from 8 to 5, okay? So your basic salary is coming from from working from 8 to 5. But the whole concept of M-Vestor is, you should be working from 8 to 12 or 8 to 2 a.m. or whatever time you're comfortable as an investor. So the basic concept of M-Vestor is, you are combining your active income and your passive income, okay? You are combining active income and passive income. This is the secret of wealthy people, okay? So if you are highly dependent on your active income and you don't have passive income at all, then by now you should be changing your lifestyle. And later on, we will talk about how you can start your investment journey. So the whole concept of M-Vestor, you should remember this, is combine your active income with your passive income. And as and when you continue this M-Vestor concept and this journey, your passive income should be higher than your active income. So if you are getting, let's say, 50,000 dirhams salary per month, your passive income should be at least higher than 50,000 per month. So that's the goal. Okay. Now we already discussed the analysis for passive income. Unless anyone has a question here. So the whole concept of passive income is you can live coming from your passive income. So the whole concept is identify your monthly living expenses, annualize it, multiply by 12. So you will get 24,000 per year. And then whatever is the amount, divide it by the expected ROI. So my illustration here is 8%. So you need at least 300,000 for you to start your investment and cover up all your expenses coming from your passive income. I hope that's clear. Now, when we talk about investment, a lot of you will tell you, okay, let's invest here, let's invest there. But do you really understand what is investment? Now, this formula or this definition is very simple, that without these three elements, you will not call that as an investment, okay? If that is not income generating, for example, you purchase a house and ginamit mo, ginawa mong bahay, yung bahay, yung binili mong bahay, tinirahan mo. So it cannot be an investment. Why? Because it is not generating income or cash flow for you. So it can be called an asset, but it cannot be an investment. Another point is appreciating in value. If it doesn't appreciate in value, it is not an investment. Okay? So, especially sa mga ladies, I'm sorry to say, pero ladies are very good in calculating whenever they see SALE in the mall, they will justify in their mind, oh, when I buy this Louis Vuitton bag, it is an investment because it appreciates in value. That's fundamentally wrong. It is not falling in the definition of investing. And of course, whenever you invest, there is certain element of risk and reward. If there is no reward or the so-called return, kung walang bumalik, hindi yan investment. Okay? So I'm sure you're familiar with this, and I hope you will never or you will not justify anymore your investment. Now let's move on. Investment. What are the benefits of investing? You can achieve financial goals. You just like Warren Buffett, you can create wealth. You can have financial security, and of course, you can prepare for future emergencies. So that's the benefits of your investment. Now let's talk about what are the different investment vehicles that are available for you. So the investment has certain appropriate risk and reward. So the higher the risk, the higher the return or the reward. Now you will have your savings, your deposits, your fixed deposits, or your checking accounts. Everything that you put in the bank has a lower risk because at any point in time you can go to the ATM or to the counter and withdraw your cash. But the moment you invest your money, there is a probability that your money will not come back, right? And that's the risk. When we talk about the risk is your desired profit or your return, or your principal investment amount will not come back. That's your risk. Now, when you invest in the stock market, your bonds, in mutual fund, maybe in real estate as well, or insurance, maybe real estate because there's a tangible asset that you can dispose some in the future, maybe the risk is lesser. But when you invest in stock, your money can be wiped out as well. Power of compounding a little bit. This is something about when you invest now, and after a few years, after a period of time, your money will grow certain interest or return. And the power of compounding is your return this year will add up to your principal for next year, and it is accumulating and accumulating. So I have prepared here the 72 rule the 72 rule in the power of compounding. Now, the concept of 72 rule is about, so assuming you have 100,000 today and you are 29 years old, okay? And the investment that you have will generate 4% return. So that's our assumption. So 29 years old, you have 100,000 dirhams or 100,000 pesos, your return is 4%. That's the assumption. Now, the 72 rule is saying 72 divide 4, which is the 4%, will be equal to 18 years. Meaning, every 18 years, it will double your money. Okay? That's the 72 rule. Now, at the age of 65, your 100,000 will become 400,000. Are you following so far? Now, let's compare it with a higher return. So the same concept or same illustration, you are 29 years old, you have 100,000 pesos or 100,000 dirhams, but the return is around 8%. So the 72 rule is saying, double your money every 9 years. And how did we get the 9 years? It is 72 divide 8, which is the 8%. Okay? So at the age of 65, your 100,000 will become 1.6 million. Okay? Now, you can see and you can compare the 4% from our first illustration against the 8%. It's not that much, right? But because the power of compounding is there, your 400,000 at the age of 65 will become 1.6 million. So there's a big jump from 4% to 8%, but the actual return that you're getting is from 400,000 compared to your 1.6 million. That's the power of compounding. Now let's compare it with the 12%. At the age of 29, you have 100,000, and again, you have 12%. Your money will be doubled every 6 years. Okay? That's the 72 rule. 72 divide 12 is equals to 6, meaning double your money every 6 years. So at the age of 65, your 100,000 will become 6.4 million. So if you can compare 4%, 8%, and 12%, it is really a big deal. Okay? It is not only just, 6%. And that is why even CEOs of investment banks and global banks in the US, they can be fired or terminated by just missing 1% of the target. Can you believe on that? Because the 1% is very, very critical. Just in this case, you have 400,000 compared to 6.4 million. It's just a matter of how much? 8% return. Now, the difference between 6.4 million and 400,000 is equivalent to 25 years salary of a person having 20,000 salary per month. So imagine the difference of 6 million is actually a lifetime of one person earning 20,000 per month. That's the difference, and that's the power of compounding. Okay, so the whole concept of the power of compounding is time is one of the most important elements of your investment journey. Okay, and my analogy here is it takes 9 months to create a baby, no matter how many people you put on the job. Meaning, time is very important, and it is an integral element of your return on investment or your investment journey. You cannot have a quick rich approach and saying, I want to become a millionaire overnight, or I want to invest in this so that I'll become a billionaire next year. It doesn't work that way. It requires time. Okay, so if you get an invitation saying that, Jeanette, Bernie, Lisa, Ria, invest tayo dito. It will give you 30% return per week, or double your money in 2 months. Too good to be true. Maybe it is a scam. So time is an important element of investment. Okay. Now let's talk about investment versus speculation. Now, a lot of you are maybe familiar with investing. When you talk about investing, there is an element of risk and return. So the risk should be reasonable, should be something that is maybe average, depending on your risk appetite. Okay, so and the higher the risk, the higher the return. So if you are a bit aggressive in your investment, in your appetite, so you can go all the way to your investment, even though it's high risk, so you can maybe get a higher return. Now, as opposed to speculation, speculating is about seeking abnormal high returns. So it is almost similar to gambling, because you don't analyze, you don't see the reasonableness of the return and the risk. You just invest blindly. So that is speculating. And the warning I want to give to all of you is investing is very dangerous. Okay, investing is very dangerous, and that is why I don't recommend this to everyone, because it is very, very dangerous. So investing is like driving in Shakeside Road, or maybe driving in EDSA, where the road is very complicated. You know, at any point in time, you can maybe, you know, something can go wrong. So just like investing, it is like that. It is very dangerous. Now, investing without knowledge, I will repeat, investing without knowledge is like driving with a blindfold. Okay? Investing without knowledge is very, very dangerous. Definitely, at some point in time, you will cause an accident. Okay? And I don't want you to experience those, because it is a very painful experience, losing your money coming from investment. Now, what are the difference between investing and speculating? Looking at the time horizon, investing is something like long-term. You are looking for a long-term, reasonable risk, moderate risk. You are looking at a very conservative, a very cautious, analytical kind of investment. And your decisions mainly is based on the fundamentals and the financials of the company. So best example is stock market, bonds, mutual fund. Now, speculating is more on a short-term kind of approach, less than a year. Sometimes it can be over a week, or even within one day, you want to gain or realize your profit. So that is more of speculating. If you are taking so much of risk, you are actually speculating. If you are too aggressive, you are speculating. Best example is if you are into FX, options, cryptocurrencies, you are not investing. You are just speculating. And a lot of people are inviting me to invest in cryptocurrency. And they are saying, okay, tara, invest tayo dito sa cryptocurrency, sa Bitcoin. But when you ask them, what is cryptocurrency? What is Bitcoin? They cannot even explain. So it means they don't know what they are getting into. They don't know what they are investing into. So that is not investing at all. That is speculating. Okay? So maybe my principle is completely different from what you have been taught, but this is my personal view. Okay? Maybe we can have a chat later on, if in case you have a different view on this. Let's move on to ROI. So return on investment is how much is the balik? Magkano yung bumalik? That's why it's called return. Okay? You give something, magkano yung bumalik? Okay? That is return on investment. And a lot of you will perhaps, oh, ROI is 10%. ROI is 15%. You don't even know what is the formula of ROI. Now you will know. So ROI is equals to your current investment value. How much is your market value of the investment today, minus to the original investment that you gave few years ago. For example, You invested how much? You invested 10,000 in BDO stocks, 2018 or maybe last year. And today, the value of that investment is, let's say, 12,000 pesos. Are you following with me? Now, the formula of your ROI is 12,000 minus 10,000 over or divide 10,000. Okay? So how much do you think is your ROI? It is 20%. It means 2,000 yung bumalik against doon sa 10,000 na ibinigay mo. So 2,000 divide 10,000 equals 20%. I hope that's clear. So next time when you say, okay, my return on investment is 15%, you should know where the 15% or 20%, whatever it is, you know where it is coming from, right? Now, there's another way to calculate your investment or your return. It is in the form of number of years, and we call it payback period. Ibig sabihin, ang payback period is, kailan mo nabawi yung original na investment? Kailan? Gaano kahaba yung panahon na inintay mo para bumalik yung iyong original principal investment amount? So this is the formula. So payback period is your invested amount over your return on investment. Okay? Let's give some example here. So assuming you have invested 400,000 pesos for SMC, San Miguel Corporation, and this 400,000 will give you 100,000 return every year over the next 10 years. So your payback period is 400,000 divide 100,000 equals 4 years. Okay? I hope that's clear. Now, what if your return on investment is in the form of percentage? Your ROI is in the form of percentage. So in our example earlier, if you are getting 8% return on investment, how much is your payback period? So it's the same formula, 100% divide 8%. So that is your 12.5 years. Ibig sabihin, you will gather or you will get 100% of your money. You will get your money back, your original investment amount, for 12.5 years. After the payback period, everything that you will get is actually your return. Are you following? Your net gain. Let's move on. Investment due diligence. Now, due diligence is something that I always practice whenever I give my money. Okay? So, and what is due diligence? It is a deep level of review or investigation. So, whenever you give your money, before you give out your hard-earned money, yan. So, kinakailangan mo talagang ingatan. You need to perform due diligence. And that is a deep level of review. So, it sounds so complicated, but I have prepared here a very simplified formula on how you can perform due diligence in your daily investment journey. And ang mga ladies, very naturally, they are good in due diligence. You know, pag may nakita silang magandang damit sa mall, ang gagawin nilang hihimay-himay nila yung tela, titingnan nila yung tahe. That is the word kilatis. Kinikilatis nila yung kanilang binibili. That is the same thing in your investment. Kailangan mong kilatisin ang tao na pagbibigyan mo ng pera, ang negosyo, ang risk. Kailangan mong i-analyze ano ba yung nature ng business, ano ba yung and so on and so forth. Now, I have prepared here a simplified formula for your due diligence. Number one is letter D. Demand-based product. Okay? Before you invest, you need to know, is there a need? Is there a demand for this company, for this product, or this service? Otherwise, if there's no demand, there will be no sales. If there's no sales, there's no net income. Okay? Are you following? If there is no demand, there's no need, walang customer na bibili ng produkto. Ibig sabihin, walang sales. If you don't have sales and you have fixed cost, ibig sabihin, you will have a net loss. Okay? That's very clear. So demand is your number one criteria in your due diligence. If this company is just, you know, for the heck of producing product or service and there is no demand, do not invest in that company. Okay? Do not invest in a company that there is no demand and there is no need. Okay? Number two, what is your intention? Why do you invest? Are you investing because you want to become you want to become a billionaire or millionaire overnight? So you need to check what is your objective in investing. Okay? Because all your intention will drive your decisions. If you want to become, if you want to have a rational decision, meaning everything is based on analysis, due diligence, you check the documentations and everything, then you are sure that your intention is appropriate and you need to assess yourself as well. Next is the legalities and registrations. If it is not legit, do not invest. Okay? You need to check, meron bang SEC registration ito? Meron bang business permit ito? Is this operating legally? If it is not legit, it's not legitimate, do not invest. Okay? Do not invest in a company that is not registered. Okay? Maraming kababayan natin ang nasunog na dahil sa sa mga scams. So, be careful. Now, you need to analyze as well and perform due diligence on what is the investment return. Okay? Where is the money coming from? Okay? Now, whenever we hear investment return or return on investment, a lot of people are calculating the ROI as a percentage. But in due diligence, okay, listen to this, guys. In due diligence, it's not important the percentage, whether it is high return or low return. What you need to check is the source of return on investment. Okay, what is the source? Where is the money coming from? If your return or your investment return or ROI is coming from the downline, left and right, or it is dependent on the number of recruits, do not invest. Okay? Why? Because your investment, your principal investment, is actually used as a return of your upline. I'm sure you know what I'm talking about here. Okay? Do not invest in a company where there is no operation and your return on investment is just coming from the number of recruits. Okay? This is not what we are teaching here. You should know what is the nature of the business. How will the business generate money? What is the sources of your revenue? So that your revenue will become your net income after removing your expenses. And then that will be your dividends or your return on investment. Okay? I hope that's clear. Let's move on. You need to know who are the people behind the company. What we call the governance team. The governance team will be the people that you have entrusted with, that you have entrusted your money. Okay, you need to entrust your money with people with people with integrity, people who are not involved, who were not involved in scams or fraudulent transactions before. So you need to analyze, you need to perform due diligence. Kilalanin mo yung mga tao na nagmamanage ng company. Maybe you are investing in a company that you don't even know who are the board of directors. You don't even know who is the CEO, who will be the senior, who are the senior management team. So you need to know the people behind the company because they are the one who will generate profit for you. Okay, so if they are not trustworthy, do not invest. Okay, this is one of the most elements or critical point in your due diligence. Next is, what are the effective strategies of this company for them to survive in a competitive or what we call the VUCA world? Okay, business world is very volatile, uncertain, complex, and ambiguous. Okay, VUCA, that's what we learn in Harvard. The VUCA world in investment journey is very, very risky. It's very dangerous. So if the company doesn't have a very effective strategy, meaning they will never survive. They cannot survive the competition, the highly regulated market. They cannot survive maybe with certain controls against your employees, your business partners, and so on and so forth. So strategy is very critical. So you need to know as an investor, what is the strategy of this company for them to survive in the business world? So that's what you need to find out. Next is, what is the nature of the business? Without understanding the business, you should not invest, okay? Even Warren Buffett, he said he is not investing in technology, okay? No matter how lucrative it is, if you don't understand the nature of the business, do not invest. Why? Because you cannot have a rational analysis and rational decision on something that you don't know, okay? Even if gold is a very good investment vehicle, I don't invest in gold because simply I don't understand how the gold market works. I don't invest in FX because I don't understand the technicals and the fundamentals of foreign currencies, where it is subject to political agenda, to the government programs. It is dependent on the president's initiatives and public speeches. I don't want to be in a situation where nagalit lang yung presidente, bumagsak na yung market. Okay, so you need to know what is the nature of the business. Next is the compliance with regulations. Are they complying with certain requirements, with certain regulations? Yes, you can be legitimate. Yes, you can be registered with the SEC. But if you are not complying with specific regulations, your P&L, your income statement will have a lot of penalties, or with the risk of even revoking your license to operate. Then it is a very risky investment. Okay, so this is something that you need to include in your due diligence. So, for example, if you are analyzing, let's say, a stocks of, let's say, a healthcare company or a hospital, for example. A hospital is highly regulated in the Philippines. We call it Department of Health, DOH. Now, if they are, yes, they are registered with the SEC, but they are not complying with DOH requirements and regulations, there will be a lot of penalties, and there is a risk that DOH can even revoke their license, okay? The last point is the element of risk. Now, you need to understand what is the risk that you are taking before you invest. Don't look at the return alone, okay? You should know what is the risk so that you can analyze what is the level of return that you are making. So understanding the risk is one of the things that you need to include in your due diligence. So again, the risk is the probability that your money will be wiped out. That's the risk. That your money will go away. That's the risk. So you need to know what could go wrong in this investment so that you can analyze in a rational way the level of return or investment that you are desiring. So I want to share with you the Proverbs 10 verse 4, where it says, lazy hands make for poverty, but diligent hands bring wealth. Okay, be diligent. So diligence is the key. Now let's move on to financial reporting. Jonathan, do we still have more time here?
Yes,
or,
sir. You can extend by additional 10 minutes because we start.
Okay.
So
I'll just maybe touch upon the financial reporting, and we can go with your questions. Now, when you do your analysis, you need to look at what are the fundamental aspects of your investment, looking at the macroeconomics, talking about the GDP, what is the performance of the country, the employment rate, looking at the inflation rate, and so on and so forth. That's the macroeconomics. Maganda ba yung takbo ng ekonomiya? Second is you need to drill down a little bit and talk about the industry. Now, industry is about who are the players in that particular nature of business. For example, you're investing in BPI, so you should not analyze the financials of BPI alone, but you should analyze what is the financial services or the banking industry in the Philippines. So maybe you need to look at who are the top 10 players in that particular industry, and then drill down further to the financials and the specifics of the company. Now, I just included here the financial statements. You have balance sheet, income statement, cash flows, changes in equity, notes to the financial statements, and the comprehensive income. So the main 2 points that I would like to discuss with you is the balance sheet and income statement. Now, the balance sheet here is you can have your asset, your liabilities, and your equity. Okay, so you need to understand what is asset, what is debt, and what is equity. So for the interest of time, we may be skipping this, but I'll just show you examples of the balance sheet. So balance sheet can be sometimes so complicated. So this is the balance sheet of Jollibee. You don't need to know and master all the numbers in the balance sheet. You just need to know how much is the total asset. Okay, if year on year, in 2017, they're having 89 billion of total asset. And then in 2018, it became 113 billion. So there's an increase in your asset. So it's a positive thing. Now, looking at your liabilities from 47 to 63, okay? And looking at your equity from 42 to 49. So you just need to look at the totals of your balance sheet. Total asset, total liabilities, and total equity. Now, let's look at the income statement. So it talks about your revenue or sales, talks about your expenses, and also it talks about your net income. So this is just an example of Jollibee income statement. So what is your revenue? So coming from 2016 of 108, it went up to 153 billion. Your gross profit went up as well, and so on and so forth. So my screen is jumping again. So your net income here is 6 billion, and it went up to 7.7 billion in 2018. So at least there is an increase in your net income. Okay. Now, looking at the profitability, this is where I would like to stop. Your net income, it doesn't need to be your measurement tool for your analysis. Your analysis should be in the form of percentage. So your net income divide your revenue, that is your profitability. So it gives you 12%. So if you want to calculate your return on equity, which is the amount you have invested, I'll just jump into the return on equity. Okay. Your return on equity is something that you need to look at every time you invest. So what is the return on equity? Return, every time you talk about return, it talks about the net income. Okay. Net income is the balik. That's why it's called return. Every time you talk about return on equity, return on assets, return on sales, it is talking about net income over or divide something. So return on equity is net income divide equity. So 12% divide your original investment amount of 100 is 12%. As opposed to your net income of 9 in this case, and you are getting 8% ROE. We don't have much time, but what I would like to point out here is your return on equity is the ultimate factor for you to consider whether you are earning money or not. Okay? If your ROE is higher than 8%, it is a good investment. 8% per year is the reasonable investment amount as per Warren Buffett. So that's it from my side, and I would like to end up with 5 principles that I personally follow in my investment journey. Is number 1, invest in learning. Pour all your nickels and coins from your pockets into your mind, and sooner or later, your mind will pour golds into your pocket. So investing without knowledge or without learning is like investing with a blindfold. Okay, it's very dangerous. So you need to invest first in learning. Number 2 is you need to identify what are the undervalued assets or stocks. Okay, so this is the tricky part. So how to calculate undervalued stocks? Something that we can maybe consider in the next session, or maybe join me in PISO Master or in Philippine Business School masterclass in investment and stock market. This is something that I cover in that masterclass. Next is you need to don't forget to consider time. Okay, time is something you cannot eliminate in your investment journey. Patience more is the key. Okay, be patient. Next is investment is a long-term commitment, not a one-off transaction. So always follow and monitor your investment. And the last point is speculating is the same as blind investing. Do your due diligence and analysis first, or do not invest at all. Okay, that's it from my side. Thank you very much. Let's be connected, and I'm active in Facebook with my Facebook Lyndon Magsino and PISO Master. Let's be connected, and if you have any question, feel free to send me a message, and maybe we can go for a coffee or for a dinner if you want to discuss anything about investment or business strategy. So let's be connected. Thank you very much for listening.
Much thank you messages. Okay, but I will just pick, no? Sabi dito, sir, is na-mention nyo kasi yung mga investment vehicles. Kung sila is newbie, if you are a newbie, so which of those investment vehicles they should invest? Which is, it should be stocks, bonds, mutual funds, or which one if you are on their shoes? No, kasi I know as well, there are so many accountants, working professionals here. They can understand your balance sheet, your financial statements. But for those newbie in this field, what advice you can give to them?
Okay, the advice I can give is something that I personally do. I don't want to give you an advice that I don't do. So I'm heavily exposed in stock market and real estate. Okay, so ito yung dalawang mas exposed ako actually sa real estate. Maybe in my portfolio is 80% in real estate and a little bit in the stocks, 20% in the stocks. So the way you should start as a newbie is just try to, meron kasing mga platform where you can trade live with the dummy money, okay? Do not invest or start right away on something na isusugal mo lahat yung pera mo. So start with a dummy account and fake money, and then do the trade. The reason for that is I want you to build the momentum and the habit of reading the news, reading the profile of the company, analyzing the ups and downs and the volatility of the market before you start the real investing with your money. And when you start with a small scale, okay? Now, for example, you can start with, let's say, 100,000 pesos, or let's say 50,000, whatever you have. So start at a small scale, because when you start, you will build there is a learning curve, and you will build the momentum of and the habit of investing, waking up early, looking at the charts, looking at the technical analysis, and I'm sure 2 years from now you will be almost well versed in the in and outs of the stock market. So start small if you are a newbie, but even you can start in a dummy fake money or fake account and dummy account, and then you know, take new learnings. But even before that, my number one advice to everyone is invest in learning first. Read books, attend to seminars like this. Even if you purchase a book, how much is a book? Maybe it will cost you 1,000 pesos. It's a very good investment to start with, rather than losing your 100,000 in one go. Okay, and as I've said, investing is very dangerous. It is like driving in Sheikh Zayed Road with a blindfold if you don't have proper knowledge. So start small and build the momentum and the habit of understanding the market first.
So Sir Lyndon, no, talagang totoo yun for newbie. So meron pa ulit dito, sir. no? Kasi na-mention nyo na yung, so I will not go through kasi binigay nyo yung diligence, no, to avoid scams, no? So I will not go with that question. So ang question na lang is, since you mentioned as well real estate as income generating asset, but which way to go? Is it the condominium investment or house and lot? Which one
Okay.
to pick?
Okay, I have a very good experience on this, and what I would like to share with you is not necessarily the correct principle for you, kasi iba-iba naman tayo ng risk appetite, iba-iba tayo ng investment principles. But my personal experience is I have a very good experience in condominiums, particularly in prime locations. So I started investing at the age of 21 years old. Bumibili na ako ng condominiums in the Philippines. And right now we have around 6 condominiums in the Philippines. Now, and we have real estate properties somewhere else as well, land and house and lot. But always look for the locations, because location is something that you cannot change in real estate investment. You can change everything. You can change the layout, you can change the design, you can change the entire structure of the building, but you cannot change the location. So that's my personal experience, that I never compromise on the location. I always go for the best location. So I have in Makati at least three condominiums in Makati, and in other parts of Mandaluyong as well. And then in 2008 financial crisis, I was heavily invested in stock market, but before that I was able to liquidate all my some of my investment in stock market, and I bought a house in California, a house and lot. So 7,000 square feet, around 7,000 square meters, 700 square meters na lot with a house. It's a 3-bedroom, 2 living room, 2 toilet and bath. So it's a very nice investment in real estate. So the way to start is, you can maybe start in paying, meron tayong mga off-plan na investments sa real estate. Doon ako nagsimula. So I was paying monthly amortization or yung equity habang kino-construct yung building. So hindi ako bumibili ng gawa na, especially condominium. So you can buy yung may tawag dito ang mga agents yung pre-plan, nasa plano pa lang o kino-construct pa lang, bumibili, nagbabayad ka na. So at the time na magawa yung building, na fully pay mo na rin yung contract value, sa iyo na yung asset. So the good thing with that is you are not taking so much of risk, because you are paying in installment basis while the building is under construction. So magsasabay yun. Fully completed na yung building, already for turnover, and then fully paid ka na rin. So that's how you can start in real estate. If there is any more other questions that I cannot answer today, feel free to chat with me in Lyndon Magsino in Facebook or in PISO Master, or email me or message me anytime, and maybe we can discuss more about this topic.
Yes. So actually, sir, meron pang nasa list, no, and medyo nagkaroon talaga tayo ng technical issues, but we have sign-ups na hindi nakapasok, but don't worry kasi we are giving you the replay, no, and probably Sir Lyndon will be more than generous to share the PowerPoint, no, later. But Sir Lyndon will join on the closing. So Sir Lyndon, you will be able to share with them where they can go later, especially those that are interested in the stock market, how they can your seminars, your lessons, and if they have questions. So don't worry po. And I hope as well talaga na you learned so much. I really need to cut this because of the time restrictions. No, thank you so much. We did not